We got up to 30.83 this afternoon in the spot price. Right now we're at 30.63, and gold as well is at 24.15, so it's back above 2400. What it shows is that the new all-time high in gold is being confirmed in silver, because we've got a new 3.5 year high or so in silver. And that's why I think silver can move very quickly to confirm the all-time high in gold. But in terms of all-time high in silver, and we know what that price is, it's $50. I don't think it's going to take that long to get to 50. I know it's taken a long, 3.5 years almost to get back around 30 and above 30. But I think things are going to really accelerate.
After 3.5 years of correction and consolidation, gold and silver are in new bull markets and could reach price levels in the next few years, which would make some blush. Gold's cup and handle pattern has a measured upside target of $3,000 and a logarithmic target of $4,000. If gold followed the 2005 to 2008 and 2008 to 2011 cyclical moves, it would surpass $4,000. In this video, renowned financial analyst Mario Innecco believes this shows that the new all-time high in gold is being confirmed by silver, as silver has reached a new 3.5-year high. Regarding silver's all-time high of $50, Innecco doesn't expect it will take much longer to reach this level, as the pace has picked up significantly. Along with its 11-year high, silver is up more than 10% for the week, its best performance since early April. Silver prices have skyrocketed past $30 per ounce, reaching their highest level since 2013. This surge, exceeding 25% year-to-date, is fueled by a potent combination of strong investor interest and industrial demand. Despite the lack of new data, Innecco highlights the significance of the Xi Jinping and Vladimir Putin meeting, signaling a strong Russia-China alliance and a move towards a multipolar world. He believes this geopolitical shift will weaken the dollar and could drive silver to $50 by year-end. From his unique perspective, Mario Innecco warns against the allure of record highs in the FTSE and Dow, emphasizing the deceptive nature of melt-ups. He underscores the significance of ratios like the Dow-Gold ratio, which suggests ongoing currency debasement. Today, the Dow to gold ratio is around 17, very close to where it was just before the 1929 stock market crash. These extreme distortions in the market indicate a larger debt market hyperbubble than ever before, suggesting a substantial drop in the Dow to gold ratio and the possibility of it reaching a 1-to-1 ratio. Now we present the clips of Mario Innecco's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I'm not surprised, because the last couple of days, silver got pretty close to that level, and I think it was just a matter of time. And the other thing I was watching was the premium with the Shanghai Futures Exchange, and I think silver closed today at $32.95 equivalent. So as I've said, I think before with you, that the price now has been set in the Far East. And this 30 level, of course, is just like the beach ball getting out of the water, popping out. That's where the line was. And we got up to 30.83 this afternoon in the spot price. Right now we're at 30.63. And gold as well is at 24.15, so it's back above 2400. And I think what it shows is that the new all-time high in gold is being confirmed in silver, because we've got a new, let's say, 3.5-year high or so in silver. And that's why I think silver can move very quickly to confirm the all-time high in gold. But in terms of all-time high in silver, and we know what that price is, it's $50. So I don't think it's going to take that long to get to 50. I know it's taken a long, 3.5 years almost to get back around 30 and above 30. But I think things are going to really accelerate. Data-wise and reason for this happening, I don't think there is much. One thing, though, I would say, geopolitically, the meeting between Xi Jinping and Vladimir Putin. Vladimir Putin flew to Beijing yesterday. I think it's very significant. It's showing that Russia and China are both behind, each other. It's a strong message to the West that they're going to do everything to, to move forward with their alternative multipolar world. And I think this is reflected in the precious metals a bit because it means a weaker dollar going forward. If you look back 40 years as well, gold is, this breakout in gold is very significant. And I think we're just in the beginning, and silver as well. So it's all very encouraging for us, stackers of gold and silver. At the same time, though, it's pointing to the fact that our currencies are becoming worth less and less, which isn't a great thing for the majority of the public. Here in the UK as well, the FTSE 100 is trading at record highs. But if you go back to 1999, 2000, where we had that dot-com bubble peak in the stock market, the Dow gold ratio was around 46. The FTSE gold ratio was around 38. And I think right now the Dow gold ratio is around 16.6. Melt-ups are very dangerous because people who don't know about what we're talking about here, they think everything's fine in the economy. If the FTSE is at all-time highs and the Dow trading 40,000, everything must be okay. But you need to look at these ratios. I think it's really important. So that's what I think the melt-up is pointing to, continued currency debasement. But, you read the FT, the Wall Street Journal, Market Watch, you watch CNBC, no one's talking about that. They're just looking at the nominal figures, and to them, it looks great.
During the interview, Mario Innecco doubts there would be significant fiscal divergence between Trump and Biden, particularly regarding the national debt. He sees the options as facing the problem head-on, which could cause substantial suffering, or postponing the issue further. Government debt that has swelled nearly 50% since the early days of the COVID pandemic is generating elevated levels of worry both on Wall Street and in Washington. The federal IOU is now $34.5 trillion, or about $11 trillion higher than in March 2020. As a portion of the total U.S. economy, it is now more than 120%. Furthermore, Innecco suggests a long-term plan by unseen forces like bankers to control the financial system, which historically involved phasing out gold and silver coins. He hopes people will question central bankers' credibility, particularly their proposed solutions. Let's get back to the interview.
I don't think he'd be any different than Biden in terms of the national debt. He might be more friendly to small businesses because I think what Biden did to the small oil company was pretty disastrous. It did help the big oil companies, but the national debt, I mean, there's only two solutions, well, not even two, but the only solution, and this would totally collapse the United States post 1787 because the U.S. is still under that constitution, but the national debt has become so huge that the only way to solve the problem is to just pull the plug. And you pull the plug, the whole thing implodes. But there's going to be a lot of people suffering because that national debt is used to back a lot of government programs like Social Security, Medicare, Medicaid, all the military, the millions of people that depend on the military. It would be a mess. What's the other thing that they can do? Well, they can just keep trying to kick the can down the road. But I heard that Jay Powell, he was in Amsterdam the other day, and he said that everyone knows that the deficits in the national debt are unsustainable. And if nothing is done fairly quickly, it will be a huge problem. So, no, I don't think Trump will orchestrate the collapse and then bring something new. But I'm not too sure because when he was president, I think 2019, the budget deficit was over 5%, and he was even pushing the Fed to lower rates and do more QE. So I don't think it will be much different fiscally. There is a plan, very long-term plan by the people behind the curtains, like the bankers, they know what's going on, but the politicians, I think they're just reacting. I don't think they can think that that well about, well, what we're actually doing is destroying the currency so we can bring this in. I think though there has been a long-term plan to go off. The bankers want to control everything. So you have to first you start with gold and silver coins, which they don't have total control over. How do they stop that? Well, they stopped it, about 100 years ago with World War One, World War Two. They racked up a lot of debt. They took off gold and silver off circulation, but they allowed you to still keep these promissory notes, which were for gold and silver. And people think nowadays that that's a good thing because you have privacy, and to some extent they do. But now they want even more control. They want to get rid of these empty promissory notes and have nothing. So, it could be that it's a plan, and that they're going to try hard to implement it. But I think a lot of people are waking up 20, 30 years ago. If they tried this, they couldn't really try because the system was still very stable. But now with the internet, with everyone, me talking to you, you are in the States, I'm in the UK. You can talk to people all over the world. People are waking up. So my hope is that, they might try to bring in CBDC, but it will be a big failure, in my opinion. It's a little bit like when they had the French Revolution. They brought in the assignats, and when that was just about failing, they tried something new called the mandat territorial, and that didn't even get off the ground. It collapsed almost as they issued it. So that's my hope. People will wake up and say, why should we listen to these central bankers who destroyed the last system? And now, why should we, accept their solution to what they did?
Undoubtedly, gold and silver have shown an epic bullish market this year, driven by a combination of factors, including rising inflation, expectations of central bank rate cuts, the risk of geopolitical tensions, and the diversification of central bank reserves. Given these insights, how will you adjust your investment strategies to navigate the potential shifts in the precious metals market? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.